We're just seconds away from this Reserve Bank decision now. Joining me is Business Editor Ross Greenwood. Ross, the expectation is for 0.5%. We're just seconds away from knowing.
Yeah, we will know very shortly. This is the Reserve Bank, which has previously said after having raised interest rates by 0.5%. And in fact, what we can see now is the rate is just dropping 1.35%. So as expected, the official cash rate in Australia has been raised for the second consecutive month by 0.5%. So just repeating, the Reserve Bank has just announced a 0.5% increase in interest rates at its July board meeting. This is as expected, and we'll get further details for you very, very shortly as to its reasons for doing this. It's in line with what it says is normalising monetary interest rates in Australia, monetary policy. The idea of this is to try and respond to inflation. These abnormal moves in interest rates of 0.5% are really about trying to not only normalise the interest rates, but also to quell consumer demand and, as a result, try and take some of the sting out of the inflation in particular. So as we come up with those pieces of information, we'll find out more information about why they have said this. They've indicated that, number one, if we go to it, it's a further step to the withdrawal of the extraordinary monetary support that was put in place to help ensure the Australian economy against the worst effects of the pandemic. The board expects to take further steps in the process of normalising monetary conditions in Australia in the months ahead. So in other words, there are more interest rate rises coming in the next period of time. You can see here already what has happened to interest rates. This is effectively a chart where you can see those emergency lows of just 0.1%. So in the period of just 3 months, you've seen them go from 0.1% to 1.35%, with the expectation that the Reserve Bank will continue to raise those interest rates. Effectively, the Reserve Bank today says that the resilience of the economy and higher inflation mean that this extraordinary support is no longer needed in our economy. And indeed, it also says the size and the timing of future interest rate increases will be guided by incoming data and the assessment for the outlook for inflation and indeed the labour market as well. So that's the key, and there's almost little doubt right now, Andrew, that the big banks again will pass these interest rates on in full to home loan customers, costing typical homeowners many hundreds of dollars on top of the increased energy bills and food prices that they're already having to pay.
Yeah, hard to get good news at the moment. Sort of feels like 0.5% a month for the rest of the year. We'll come back to you in a second, Ross.